Hello, my name is Kimberly Maeveline Ruslim, and today I am honored to present my thesis titled Estimating the Intrinsic Value and the Riskiness of Hotel XYZ for Initial Public Offering or IPO. In the next few minutes, I will walk you through the key findings, methodology, and implication of this study. I welcome you any feedback or questions after this presentation. Let's begin. As we move to the research background, first, the impact of COVID-19 on tourism. Prolonged travel restriction significantly affected the travel and tourism industry. As the restriction eased by the government, so people tend to do revenge travel, led to a surge hospitality demand. As the industry grew and IPO trending, the hospitality industry is experiencing steady growth with a projected CAGR of 5.04%. Many hotels are opting to do IPO to secure fundings for expansion, renovation, and also market positioning. Therefore, the complexity of IPO pricing and valuation requires careful assessment, as inaccurate valuation may result in lost capital raising opportunities. As said before, the uncertainty surrounding IPO companies fluctuates over time, making it difficult for underwriters to assess their value. Therefore, to avoid mispricing, Hotel XYZ is conducting an in-depth valuation analysis by using discounted cash flow and also relative valuation to determine its intrinsic value and also assess their potential risk. The study aimed to provide investors with comprehensive understanding of Hotel XYZ, financial standing, and risk factors. Therefore, it also helps and to enable informed investment decision. There are two key takeaways in here. The first one is to provide insights into valuation strategy for hotels preparing IPO. And the second one is to help prospective investors to make informed decisions while ensuring sustainable growth for hotel businesses. In this research, there are two research questions. The first one is, what is the intrinsic value of Hotel XYZ in the purpose of IPO by conducting discounted cash flow and relative valuation methods? The second one is, how does the risk variables impact to the value of hotel by conducting sensitivity analysis? In order to answer these two research questions, the research objectives are: first one is to determine the intrinsic value of Hotel XYZ in the purpose of IPO by conducting discounted cash flow and relative valuation methods, and the second one is to estimate the impact of risk variables to the value of Hotel XYZ by conducting sensitivity analysis. Understanding company valuation is fundamental in corporate finance, as it informs investment decisions such as buying, selling, and also holding shares. The main approach to valuation include two. The first one is discounted cash flow. What is discounted cash flow? So it is like an estimation value based on its expected future cash flow or projection how much money will generate in the future. And the second one is relative valuation, which compare firms' market value with similar companies by using valuation multiples such as PER and also PBV. Moving to hotel valuation, there are key performance indicators in hotel valuation such as average room rate or ARR. It measures average rental income from occupied rooms. It also helps with pricing, occupancy, and also expansion decision. Second is revenue per available room or RevPAR. This is key indicator of profitability and also market performance. Third, occupancy rate. This is help tracking the hotel performance and also industry trends. It is also effective financial indicator despite data inconsistencies. The last one is earnings growth rate. For the research object, this hotel is owned by PT PPM and located in strategic South Jakarta. It is 3-star hotel with 5 floors and 75 rooms. There are many facilities such as restaurant, business center, and also meeting room. For the data resource, I got their financial report from 2018 until September 2023, and also I'm using Badan Pusat Statistik, and last is interview with the management. And for the research instrument, I determine the value of Hotel XYZ by using DCF and also risk analysis, and last is relative valuation analysis. Moving to the analysis, in Indonesia's economic growth between 2023 until 2024, despite the global challenges, Indonesian economy remains strong, according to Bank Indonesia in 2023. There is also inflation trends in July 2023, as you can see there. The inflation dropped to 3.08%, the lowest in 16 months. Moving to the hotel industry, so the hotel classification trends, if you can see there are star rated hotels, the sharp decline in 2021. However, it recovered 2023 to until 2023. And for the non-star rated hotels, it also declined in 2021, but it improved in 2022 until 2023, but it's still below 2019. Next to the Hotel XYZ performance, Hotel XYZ is part of PT PPM Strategic Investment in Indonesia hospitality market. Has seen fluctuating performance due to external factors such as pandemic. From 2018 to 2023, the hotel experienced a significant drop in revenue during 2020 until 2021, but it has shown gradual recovery, particularly in 2023. This recovery is attributed to easing travel restriction, a surge in international tourism, and also the government support for the tourism sector. And for the hotels occupancy rates, room rates, and revenue have rebounded, though not yet to the pre-pandemic levels. Before we do the valuation, we must have the assumptions. For the Hotel XYZ valuation, we carried out by using income approach with assumption drawn from the both hotels' historical performance and also prevailing market condition for 3-star hotels. The analysis covers 6 years projection from 2024 until 2029. Why we only cover 6 years projection? It is because a shorter timeline is more reflective of the volatile hospitality industry. Or the key assumptions include room operation. Hotel XYZ operates with 75 rooms across different types, totaling 27,375 room nights per year. Occupancy rates, it is projected occupancy rates increase gradually from 46% in 2023 to 69% by 2029. For the average room rate, it is assumed to grow by 10% every 2 years. For the revenue assumption, room revenue, food and beverage revenue, and also minor other department revenue are forecasted using historical performance ratio. For the department expenses, assumption for expenses include 19% of room revenue for room expenses and 60% for food and beverage expenses, and last 58% for MOD expenses. And for the growth and working capital, economic growth is projected at 5% annually. For the weighted average cost of capital, or WACC, the risk-free rate, we got it 7.03%. I got it from 30-year Indonesian government bond in September 2023. And for beta, I got 1.11, adjusted from 18 listed companies by using Pevindo and also Yahoo Finance. And for the market risk premium, it is 7.38% from Damodaran in January 2024. For the cost of debt, the interest rate is 9.40%. Got it. Source is from Indonesian Economic and Financial Statistics in September 2023. And for the corporate tax rate is 22%. And for the final cost of debt after the tax adjustment is 7.33%. For the Hotel XYZ ratio for debt equity is 40/60. For the weighted average cost of capital, I got the final number is 12.09%, with the marginal tax rate applied 22%. For discount cash flow, I project from 2024 until 2029. And for the present value from FCFF analysis, I got 2.7.7389.281. And also I added cash and bank balance, which is 1.430832362. Therefore, I got for the final intrinsic value is 4,178,221,648. For the low valuation, there are factors affecting that. It is because low occupancy rate due to post-COVID-19 recovery, and also the room rate growth conservatively set at 5% per year. Income approach use reflecting actual cash flow generation. So the final share price is 81,926 per share. This is high due to limited share availability. Moving on to relative valuation, companies selected are 7 hotels and tourism firms listed on IDX. As you can see that the price to book value valuation is higher than PER, suggesting strong asset value. Low earnings per share or EPS indicate weak cash flow generation despite substantial assets. And also, Hotel XYZ is asset rich but struggles with profitability. Therefore, the reconciliation value represents a realistic and balanced valuation by incorporating both fundamental financial performance or DCF and also market sentiment or relative valuation. The final weighted value is 324,663. For the sensitivity analysis, in conclusion, growth in average room rates are the most significant driver for Hotel XYZ valuation, followed by occupancy rates. The strategic efforts to optimize occupancy and implement effective pricing strategy are essential for maximizing the hotel intrinsic value and financial performance. Growth rate projection, though less sensitive, should still be monitored to align with market trends and ensure sustainably long-term growth. The intrinsic value, it was calculated at 4,178,221,643 rupiah, for the translating to estimated share price of 81,926 rupiah per share. For the relative valuation metrics indicated 668,770. Analysis identified that growth rate in average room rates as the most critical variable, followed by occupancy rates exerting the greatest influence on the share price fluctuation. The relatively low intrinsic value highlights that there are challenges in the company's current operational and also financial performance, suggesting that Hotel XYZ may not be fully prepared for a successful IPO. Last, suggestions. To enhance the intrinsic value and prepare for a more favorable IPO, several recommendations are proposed. First, Hotel XYZ should adopt dynamic pricing strategy and targeted marketing initiative to maximize revenue and operational efficiency. Second, efforts should also focus on improving occupancy rates by maintaining competitive average room rates while adding value through upgraded amenities, additional services, and also consistent service quality. Last, furthermore, aligning long-term strategic objective with improved profitability and also competitive positioning will strengthen the company's market appeal. This measure aims to bolster Hotel XYZ intrinsic value, ensuring a more stable and also competitive foundation for its IPO and long-term growth in hospitality industry.